Okay, welcome to the upgraded version 2.0 of the Unreasonable Podcast. Now with video. This is the first time we're trying to do this, so I don't know how it's going to turn up.
Minty fresh.
Minty fresh.
I gotta say,
it took us about an hour each in front of the mirror to try and look this damn good. I've got to say, we're pretty impressed.
I don't know. You speak for yourself, Michael. I just woke up like this.
Hold that thought, ladies and gentlemen. Welcome to the Unreasonable Podcast, starring none other than Michael Blakey of Cocoon Capital, Angel Investor of the Year in UK many years ago, 500 Global, Vishal Han, our partner, and myself, Hian Open Space Ventures. That's actually important to put there because there might be more people who actually watch this now that we have video. But coming back to the watch thing, we can continue. Yeah.
I'm just trying to figure out why today you've decided of all days to wear two watches.
That's a good point. I've actually been wearing two watches for about a month now. Because I've discovered the joys of a Apple Watch, and I'm so addicted to the fact that it notifies me for WhatsApp and a few other things, and it tracks my fitness that I stopped wearing my other watches.
You know, we make fun of you by calling you Uncle Hian, but now this is like Grandpa Hian territory. If in 2023 you're like, I just got this Apple Watch and it's amazing because it notifies me about stuff.
Okay, so in my defense, right, I got the very first Apple Watch, 10 years ago. And
It's got very sensitive now.
I just, this sucks.
Defense.
And then I just renewed my mobile phone contract. It's like, do you want an Apple Watch? I'm like, yeah, I'll try it again. Oh my gosh, it's so much better now. So,
but can I just say something? Because of you, I have been branded. So I go away. I've just come back from a month road trip of fundraising for the new fund.
Okay.
I sat down at the laptop, just did a little bit of work, and my partner came in and she just lifted up my t-shirt on the arm and just started shaving me. I'm like, what are you doing? She said, just go back to work. I was like, that's fine. I just, and she comes out with this like stapler.
Oh, I know that.
And she comes and
Did she CGM you? Yes.
You got CGM.
Oh, you got CGM.
All right.
Oh, well
she's
done.
Like, you're fat. You've been eating unhealthy. But she doesn't put the app on my phone. She puts the app on her phone.
Oh.
So I now get messaging saying,
this is great.
What did you eat an hour ago? And I was like, really?
Mike, real love is someone telling you how it really is.
Yeah. And then she uses the argument, it's not because I need to know. It's just, I worry about the kids.
Yeah.
You know, you've got to be around for the kids. And what can you say? You can't say I don't really care about them.
Did Maria see you eat all those potatoes with dinner just now?
Your
CGM's off the hook right now.
I am sure I'm going to get a message.
If you turn your mobile phone off, right? So like, bing.
I think we've been doing a lot of reflecting on what 2023 has been like. Hian very famously at the end of 22, I don't know if you remember this, Michael, said it's going to be a great year. A year where things turn around and are going to be all for the better, right? The markets are going to turn, tech companies are going to raise a phenomenal amount of capital, and we're going to lay away whatever waste was at the end of 2022. And that didn't really happen. In fact, it seemed to be a year of calamity in so many different areas, right? We start the year with the SVB crisis. We move on to FTX and Three Arrows Capital collapsing, people running away from Web3 in general, running towards AI. And we're sitting over here in the studio fresh off Sam Altman being fired from OpenAI. The tech market's taking a pounding in general, whether it's in the public sphere or whether it's in the private sphere. Are we doing things wrong as VCs in general? Does VC have a reputation issue?
Well, I'll start off by saying that by definition, as a venture capitalist, you want to construct a portfolio and you expect a certain percentage of your portfolio not to succeed because that's the way you mitigate risk. And so if you bet on a new business model, you bet on a management team, you bet on a certain rise of a new technology, and it doesn't happen and you lose money that way, that by definition is being a good VC because I think there's a study that says that the more risk you take in that regard, actually you get more outlying. However,
but doesn't it seem like everything's going wrong here?
Yeah, however, right, I don't think LPs forgive you if you lose money the incorrect way. And so what do I mean by that, right? So number one, corporate governance. If your founders don't operate in a way that befits, running a company. Number two, if you pay too high a price, right? If you actually followed the herd, right? And just didn't really do the homework and just said, oh, this is the hot trend, this is a price, it just keep on going up. And I don't think Southeast Asia has been immune to it. In fact, I would argue Southeast Asia has been on the forefront of it because for many people, including ourselves, right? We are first generational venture capitalists, and so we're learning the lessons along the way. So do we have a reputational problem? I think that if you lose money the wrong way, like I described, then it's unforgivable. And a lot of people on social media always love to talk about that. But on the other hand, there's also the other perspective that a lot of the losses and the devaluations are because of the increase in the interest rates. So it's, to me, on balance, I think VCs don't have a reputational problem, but it feels like more and more VCs are doing it such that the good ones are being lost in the whole thing, right? Oh gosh, the number of companies that screwed up and lost money.
Do you feel that what's happening right now in the press, right? There's almost like a villainy of VC that's happening right now. Do you feel that is based on a limited and unfair subset of companies that's been
it's there because it's great
in
press.
Performance?
It's great press.
Media is a business.
Yeah, media is a business. And it's easy for you to just say these guys lose money all the time, right?
Bad news sells. But I would actually argue slightly differently, but I would just on the press and everything that is going on. As I'm the old guard here, I've been doing this for 23 years. I've been through a few upturns and downturns. Whenever there's a downturn, everybody's always there pointing fingers.
I just want to say it's a remarkable skill to be doing this for 23 years and not having an exit. It's incredible.
I've had tons of exits. Don't give me that. So I think the reality is that, when things are not great, bad news sells, there's always going to be screw-ups. What you see, what frustrates me is I look at what's going on in Southeast Asia now, and a lot of the mistakes that have happened are in terms of like the corporate governance, chasing the wrong deals, no business models and everything. There's an element you always want to take risk, but there's also being just dumb. And we went through that whole period during the .com, boom and bust, where we went through that whole, we'll just buy market share and then figure out a business model later. And it was proven time and time again not to work. But I think the interesting thing for me is if we got good reputation or bad reputation, if when you go and talk to LPs, they're still excited about the vertical if you've actually performed. If your portfolio is actually standing up. There's numerous VCs out there I think will really struggle to raise their next fund. They won't be able to raise their next fund, and there'll be new people that come in. And those that have got a good track record and actually they have their portfolios, even if they've had been devalued, still have actually shown that they can actually survive and actually still grow. I think those are the ones where investors are going to double down on, because they know that it's not just the good times they can be successful, it's also the bad times.
So you're saying that whatever we're seeing is a function of some bad VCs?
Yeah, just some bad VCs
That's
making...
it.
But
okay.
I think also you can always argue about, is the model right? Are we too reliant on the outlier to actually make returns for our funds? But that is the element of what
that's
VC...
the asset class.
That's the asset class.
That's what you pay for. I think that, and that's the business that we're in, right? I think we are in the business of moonshots. We are in the business of outliers. And the reason why, that's the venture part of venture capital, which is we are taking a risk that others are unwilling to take in underwriting those companies, in backing those founders that have those crazy ambitions and ideas to get something done.
Which is fine, as long as you use basic common sense in terms of that.
And I totally agree with you. But you know what I would say is this, right? I think what we witnessed, like what Hian said earlier, is that even for myself, my whole investment career has been at the start of this bull market and bookmark right now to not bookmark, but really like now I've seen this bear market and how things have turned. And the behavior is a function of the exuberance that you see and the attitudes of the market in that time. And you can't help sometimes just get caught up in it.
I know what you're driving to as a point, which is that LPs, we stack up against all other asset classes, right? And in this interest rate environment, you can make a lot of money putting it in cash or bonds and other things. You do not need to be in venture. Whereas when you're in a zero interest rate environment, venture was very attractive because it felt like one of the rare few things that actually could get you your returns. And so LPs are not in the business of doing what we do, not in the craft. So you have to interpret the lens, which is they will look at your top tier performance and all that kind of stuff, and then they look at your strategy. Maybe the swing point is S, like how much skin in the game, right? we put a large percentage of our own net worth into the funds. None of that has got to do with that framework which you're talking about, which is top quartile and all that kind of stuff, right? And I think that's simply because a lot of those factors are lagging indicators, right? Remember at the height of 2011, when all our funds looked like really, really good funds, people raised tremendous amount of capital. And counterintuitively, coming back to this point of VC having a reputational problem, really, I feel like it is at this point of time that counterintuitively, it's going to be a really good vintage, but a lot of people don't have that benchmark information because you should have taken your marks down. If you haven't taken your marks down, please take your marks down. And then a lot of LPs will go like, oh, my CIO wants to see this benchmarking. So I always tell people, look at the qualitative things, the ENDS, and add that to the historical performance. But to me, because now everyone's talking about how, VCs don't do corporate governance, VCs are just chasing companies at high price, it really causes a lot of fear and anxiety to maybe CIOs who have to look at the whole picture, and then you've got the venture guy who's trying to pitch your fund to the CIO.
It lives in relation to a whole bunch of other assets.
Correct,
basically. That's one. It's a relative allocation.
That's why it's a reputational problem.
Yeah. Okay. Yeah, I can get that. I think that's a solid point, right? Which is that the 4 factors don't really live up for most of VC.
Yeah.
Actually, just rewinding.
Isn't it true that 75% of VCs don't return all their money to the LPs?
I know that. I
don't know if
we should
it's
check that, but I know that
as an industry,
apparently, if you
the median is
everything,
shit.
The median is you lose money.
The median is you lose money.
Yeah.
So it's just a couple of bad managers, really, that are spoiling the crop of VC.
Yeah, I totally agree with that. But I also think that every period you have bad VCs, and the whole point is that LPs are extremely tough. Like as we all know, when they back one fund, they're normally looking at the next 3 or 4 vintages. But if you're not performing, they're going to stop investing, or they're not going to kind of double down, which makes it very hard for you to raise the next fund. And I think what we're going to actually see is over the next couple of years, a lot of the fund managers that haven't performed, that have really struggled, that haven't actually got a clear investment philosophy and have steered, kind of chased the deals, not followed proper corporate governance, so have a lot of this blow up in their face. I think they're just not going to raise the next fund. And because there's still opportunity and there's still that hope of investing in a unicorn, getting this huge multiple return, I think there's going to be new managers coming up. And what I'm really hoping to see, is that a lot of the people who are going to be setting up the new funds are ones that have come from the successful funds. The ones that have actually got more investment background are actually coming from a kind of education. So people coming from Open Space or 500 who've been working there and just want to kind of go out there and get it themselves.
Let me ask you this. Do you feel like in this environment, new managers or first-time managers can successfully raise funds? Because I've got a bunch of friends who are now, or people that I know in my network who are going out there and trying to be, those first-time managers. 1 or 2 of them may have left like good shops to try and go out there and start their funds, and they're having a hard time.
Yeah, the answer is no.
Yeah, it's tricky.
And
it's
you know
really
why,
difficult.
Right? You know why, right?
No, but please tell me, Uncle Hian.
Okay. To what, Uncle Hian? I mean, generally, first-time funds have been very difficult to raise in the first place, right? We've always known that. I think when we raised our first-time fund, it was always hard. In this environment, I think the short answer is that LPs are really required to take the shot straight down the fairway, right? So you can't do anything creative. You can't take out your sand wedge and do something interesting. You literally have to go find the thing that's the most conservative and the safest in that asset class. And unless you are compelling as a first-time fund, and number 2, you're putting a lot of your own money as a first-time fund, and 3, you find investors, and this is the most important point, that actually have a strategy backing first-time funds, right? So Duke was one of those, right? So Duke is a very rare institutional fund.
A lot of them have emerging manager practices,
right? And that emerging manager bucket in this environment is the first to go. And so then now you're left with family offices and you're left with your friends.
Yeah.
So I think if you put a lot of your own money in a first-time fund, you might be able to convince like the tauke businessman who believes, hey, you put money, okay, I put money also. Then you can get raised up. But you don't have the emerging manager bucket anymore in the US because, they're just even fighting to get the allocation for VC in the first place.
I agree with you, but let me give you a little bit of a counterpoint, like that sort of like on Michael's side, that perhaps some of these people may be able to successfully raise. And this goes against some of the anecdotes that I have personally, which is this. If you're a first-time fund manager and you're happy to raise a smaller fund and you don't need to touch institutional capital, you're going the friends, family, some self-funded, people who know and trust you, maybe the smaller family offices, maybe the smaller corporates.
Yeah, that's the only way.
That's when you can get that done. Yeah. I think the mistakes a lot of these people are making is that they're going down back to the institutional LPs that their larger old shops had access to and saying, back me now.
Yeah.
And those are the people that need to, as you said, hit the shot straight down the fairway. They're not going to be taking risk on new managers right now.
I would actually double down on what Vishal is saying. I think if you're a first-time fund manager, go out, say, raise a small amount, but also think about how can you differentiate yourself from the other early stage funds out there? Do you have a clear thesis? Do you have a clear ability to actually say, this is how we're going to differentiate ourselves and get the deal flow and all of these things? And I think the second thing is do angel investing. It's what helped me raise my first fund. And I think
I did a lot of angel investing.
We did angel investing. We went there. We actually built up a track record.
That's right.
In a personal capacity and say, look, these were the type of deals that we've backed over the years. These are the returns we're getting. So now we're just trying to formalize it. I think if you just go straight into we want to raise a fund and you haven't actually done anything before,
can be hard.
It
can be hard to do that.
I would argue that a lot of the folks that you probably are talking to already have done that, right? And despite that, right, that being the good advice,
they're still having a hard time.
They're still having a hard time because I'll tell you that, right? So you're absolutely right. Like if you take off the emerging market VC bucket gone, you're just down to family offices and people. And the fighting chance
not even
to do
family
that,
offices, high net worth individuals.
Yeah, and the fighting chance to do that is that maybe you get money from a person who actually either owns a business or was a business owner, and he or she really understands that it is at the down market that's actually the best time to put money to work. And why VC has a reputational problem a perceived reputational problem at this point in time is because what we're seeing here are really lagging indicators of the excesses that happened 24 months ago. And then in 24 months from now, people go like, oh my God, you're doing so well. I said, well,
look at the marks now.
You only get to benefit that when you put money in the ground when it looked really, really dark. And I think that's a very interesting dynamic that I always tell my LPs to do. Like, that's why, the manager doesn't have a reputational issue, right? So people back the manager. But then the asset class VC, does it have a reputational issue? When you are trying to, institutionalize the thinking process so that it's not just a personal decision, I think a lot of the problems we're seeing now is that the excesses and the lack of corporate governance and the high prices people have paid and the sheep that, people are following, that happened 24 months ago. And I repeat again, right? It does feel like we have a reputational problem, but actually, ironically, counterintuitively, if you trust the manager, put the money in now, and 24 months from now, you'll be on the golf course saying, see, I'm like the smartest high net worth individual, right?
Yeah, but perhaps there are a couple of more points over here, right? The first is that this behavior from whatever it is I've read, because I wasn't there in 08 or 01 in investing in the tech markets, this has happened before, right? This behavior is not something that is new.
That's Michael's point.
Yeah, exactly. It's something that we've seen before. It's just that we don't learn necessarily very well from it, right? Human memory is very short-lived when it comes to learning these lessons. And so we face a problem every time it comes about and the markets are frothy and it changes the behavior and it changes the incentives in a big way. And I think keeping steady and deft and remembering, right, that this has happened before and it's happening right now is so important to not making those mistakes. And something that we wanted to talk about, ensuring that the institutions that we want to build learn from the mistakes of others, learn from the mistakes that we may have made in cycles like that.
I think the other thing we've got to remember is if VCs weren't here, there would not be, 99% of these companies would not find funding. So in terms of the future of economies, Singapore in particular has put a lot of money in for the investing in tech, building tech here, wanting tech to be part long-term future of the economy. you need to have people backing, and it's been proven that you can't rely on the banks or other financial institutions to really be coming in at the early stage. And in terms of private wealth, is not, in terms of the angel market, has never really taken off to the level or to the sums that can support this. So there is still a fundamental need for a lot of these businesses that we see and talk about today. They were backed by VCs, and it's required.
I agree with that, but I also believe that it is time for a needed culling and creative destruction of VC as it has been over the last few years, and it's time to sort of like reset and go back to a fairly more rigorous way of investing, setting price, getting involved with governance in the companies that we're investing in, being more operational in the portfolio. And I think
these are all things
really
open
things that
source
are
does.
So are you-
I'm glad you recognize that.
So are you rolling back on the whole, we don't need to have board meetings?
No.
So I remember a few episodes.
So he does
I
that
also-
for the initial checks.
Correct.
After he comes in, then he attends the board
Absolutely.
meeting. I know
So
that.
for the checks that for the companies where we're putting in $20 to $30 million,
I
we
get
sit
very
on the board,
excited
and
when
so we do all of
it
those
turns
things.
out that
But the thing is, it shouldn't just be at the 20, 30
No,
million.
No,
It should be at the
fundamentally,
earlier
I
stage.
do not believe at all that a seed stage company needs a board. I think that's bullshit.
No,
We so disagree.
But I feel like people who need to feel, people who need to feel important and say, I sit on a board of a 3-man company and the board is 7 members and I'm one of them, like board seats.
I'm going to break up this fight because I like the both of you. And I think what's interesting is that you play poker, you play a lot of hands, right? And I think, Michael just believes that he can find these people and he kind of keeps an eye on them from day one, right? So,
Don't disagree with that.
Mm-hmm.
Different ways to bake the cake,
different ways to bake
Different
the
ways
cake.
to
And
bake
I
the
just
cake.
wait for the good ones that you like, and then I just come in and pounce on them before other people
That's
pounce
it.
on them. Well, I think on a more interesting note, I feel like Southeast Asia perhaps is starting to turn the corner. Do you agree with me on that? Or?
What do you mean?
What I mean is that the worst is over. My predictions are correct. It's only just 12 months
God.
later. Yeah,
Jeez.
so you don't just, a broken clock is always right twice a day. But no, I think Grab has announced adjusted EBITDA profitability. For those of you guys who wonder what adjusted EBITDA is, it's sort of minusing off one-time costs, which I think include a hefty amount of stock compensation. But it still counts because I think it means that a lot of these companies have become stronger in their cash flow. And so it's turning the corner.
I'm a little bit optimistic, I've got to say. I think my general take is that we'd probably have more reason to be optimistic sometime in 2025. 2024 is still a wait and see kind of year, but news about Grab has been great. The fact that there is a turn in profitability. We've also seen some changes in the way unicorns are being built, or these larger tech companies. So, for example, eFishery, one of our portfolio companies that just raised at north of $1 billion.
Congratulations on that.
It's profitable.
It's
a profitable technology unicorn
God, it's
in Southeast
profitable.
Asia.
Yeah.
And I think for a few of the other companies as well that have a solid amount of cash, they're really starting to focus and restructure their businesses over the last few years with that eye on profitability. So what are the things that I think are going to determine how 2024 looks like and whether Southeast Asia turns a corner? One part of it is how the broader global economy does and how the US tech stock listings that are going to come out are going to do as well.
Which ones do you think are the ones that are going to?
So I think the two
move the
big
needle?
ones that people are talking about
Don't say SpaceX.
that I also believe in. No, I think one was ARM, and I think it's good news that ARM hasn't tanked. And the second one is actually Stripe. So I think Stripe's the big one, and everyone's going to wait with bated breath to see how that IPO goes, because it is going to be this Schrodinger's cat moment on something that is a very well understood tech model in fintech and payments. So seeing how that goes, I think is going to be a bellwether of how 2024 in general is going to pan out for tech companies and what that multiple looks like and what the market's expectations on multiple are going to be.
For good businesses, there's still money out there. I think where my concern is going forward is the health of the early stage, and what I'm talking about pre-seed and seed funding in Southeast Asia. I think a lot of the funds over the years have been moving upstream, and I haven't seen enough new money, new funds being started that is actually covering the shortfall of now the bigger funds are. And as we just talked earlier, I think it's going to be even harder for first-time fund managers, who are normally the ones running the pre-seed and seed funds, actually to raise the money. So over the next couple of years, we need to figure out how to get more money in, taking that really high risk of pre-revenue, pre-product businesses. Otherwise, the funds later on down the line are going to get starved of good deals, because it's still a volume play. Vietnamese early stage VCs who just haven't done a new deal. They're just not seeing
there's nothing in the market,
anything being formed. And so even though there is a little bit of money there, it is not a huge amount. And there I'm not so sure about why. I can understand in Singapore more, but I can't understand it
I have a theory about that, which
What's
is
your
that
theory?
The signal-noise ratio should be better, right? So the ratio of startups that are started may decrease, but the quality should increase, because you really have got to be a crazy sucker to try and start a company now, right? And so there's this sort of, you said this, right? Like in the downturn,
Yes.
only the true believers do
Yes.
that. And so you do have a crop of people in 2011 who thought that it was easy, a quick way to make money. And, really, there wasn't really the third factor that you always see in Silicon Valley, or the true entrepreneurs, which is the, it's really about proving something to yourself, or really being obsessed about a problem that you want to fix, right? So I do feel like the signal-noise ratio has decreased, and I like that. I actually don't mind that, because I'm not in the business of, really just making a lot of investments. We probably make 7 new investments a year now, so that's fine to me. Yeah,
I don't think the signal-noise ratio has decreased. I think that actually
the quality has come down as well.
Actually, so what I'd say is that, like when we look at the numbers, the total number of companies has gone down, and the ratio of quality companies has gone down too. So I think that there's a decrease in the number of quality investment opportunities.
In Southeast Asia.
Yeah, because we track
So
all
you track
of the
that,
we
and
track every
you
single
put a point and you say,
and we
that's interesting.
We score and weigh every.
That's very interesting.
We have a full data practice, so we just collect all of this stuff. But here's something interesting, right? And this is obviously based on our lens. So I'd put that caveat. Now here's something interesting, right? Which is the other factor that you don't have over here, that maybe in a market like the Valley, is that you understand that technology companies over there are not playing an offensive game in bear markets. You're playing defense. So when companies, when larger technology companies are playing defense and are focused on protecting their core businesses, it gives you the startup opportunity to build in new spaces, as opposed to expansionary markets where large tech firms are trying to become monopolistic horizontally into different categories. So acquisitiveness decreases.
Oh, okay.
Spending on new areas of business decreases, and that also creates opportunities for companies to grow. So I think in Southeast Asia, there's another dynamic as well that is a little bit different from the US, which is markets like this are perhaps instigators of more risk-averse behavior, even in talented people. So you think that these people are going to come out and start companies, but chances are, because the climate is uncertain, you're going to want to still work for something that's safe and secure. We still think that there's more investable opportunities than we have capital to back. By the way, that is still the sentiment. So it's not that, there's not enough opportunity for us to actually deploy capital. We don't feel that way. We still think that there's enough quality opportunities. But where we thought it was going to be, especially remember based on what I said, that I think quality of entrepreneurship is going to increase, we've definitely seen that. We've definitely seen that signal-noise ratio change take place in some other markets, especially
but not in Southeast Asia?
But not necessarily in Southeast Asia yet. And I think it's a risk aversion. It's the behavior of risk in markets like this. And perhaps it's because it's the first time
going through a downturn. And so people are unsure how to navigate it. And once you have more certainty and confidence, perhaps you come out. I'll give you some counterpoints to that. And again, I'm talking about like the big number set and not the individual cases. Yeah.
We've even met people spinning out of banks, right, and established financial institutions to start new ones. or to start things in various sectors, whether it's AI or whether it is in, computational biology is another one that we've seen for a very, very established scientific team.
We're talking about whether Southeast Asia has turned a corner, right? And, we've all done this for 10 years, so I'll sort of sketch it out. Like when we first started out in Block 71, we were hanging out with Kwek Surya at Carousel. It felt like most of the entrepreneurs were 26-year-old human beings who were coders and wore T-shirts, right? And I think the diversity of the founders that are coming out now is massive, right?
Yeah.
So I probably met that same guy who came out of the bank who just did that fintech thing, which we actually put money in, right? He's like a 48-year-old ex, Blackstone kind of guy, right?
Yep.
So I think that there's way more people attempting to do startups. And so if you add the fact, number one, that Grab, Gojek, and all these other companies were all the previous generation of companies who were built at a time when zero interest rate environments were the norm and you would never get out of it. And their business models were there. And then they went IPO and they sort of dropped by a lot of money, right?
Right.
Like just like everybody else.
Yeah.
That nervousness is really what you see today in newspapers. But underneath that are, number one, companies that are becoming profitable because investors want them to be profitable. They have no intention of announcing they're profitable. They're very happy to be profitable. So there's probably an underlying layer. I know those companies, right? You know those companies. So they're not shouting in the newspapers. Number two, these great entrepreneurs turning up. So the industry and Southeast Asia is turning a corner, but I think the information flow is not reflecting that. That's why I think it's turning a corner.
So Michael's on the fence. You say it's turning a corner. I feel that corner is a long corner and probably really turns in 2025.
That's still sitting on the fence.
No, it's not. It's not. I'm optimistic. I said that straight off the bat. Sitting on the fence is saying I'm sitting on the fence. Me saying that it's a year ride before I think things really turn.
I'm going to calibrate to Vishal. I think that it's probably closer to 2025. And I'll tell you why. Because it's going to take a long time for the interest rate environment to normalize and come back. And number two, if these guys are just starting out companies it's going to take 2 years to go,
Yeah.
But I think the other interesting thing, though, about Southeast Asia, I think all of the kind of like low-hanging fruit in terms of opportunities have actually been done.
That was a long time ago.
No, I disagree. That it always feels like a low-hanging fruit. The new low-hanging fruit.
I'll tell you what's another. I'll give you I think if you're talking about like food, food delivery and ride hailing and basic e-commerce and basic fintech. Yeah, sure. Yeah. But I think that there's a lot more low-hanging fruit that's overlooked in Southeast Asia. One of the biggest categories of low-hanging fruit in Southeast Asia that just does not have the attention it deserves is agritech. I feel that if you think about how primitive farming is, but when you compare that with how large the both domestic and export markets for certain agricultural, including livestock goods are in Southeast Asia, that opportunity can be pretty huge, right? You just have to pick the right sectors that you're going after and really, really, really try and understand them better.
I always worry like, oh my gosh, I'm never going to find a new cool thing and then some new cool thing.
There's always something else.
AI there's always something else. All these kind of things all start to turn up. Semiconductors and stuff all start to turn up. And some things which are used to be, were cool then did not become cool and then now are cool again.
But that doesn't go against what Michael's saying, which is that like the low-hanging fruit stuff is perhaps done. But I think like there may be in some industries in which they're just so overlooked by technology in general.
Yeah.
Oh, yeah. Yes, I agree with that. Oh my God, this must be a terrible pod. We seem to be agreeing with all of each other all the time.
We don't. I think we disagree quite a fair bit.
It's just taking we're meandering there. It's not obvious agreement.
Hian, kick us off 2024 predictions.
Well, the world now is in so many knots now. It's really hard to unwind itself. Having said that, I do think that Southeast Asia is going to have a good time. That's my prediction. And I'll tell you why. Southeast Asia is just one of those regions where I don't see them obsessed about projecting foreign domestic policy, starting conflicts, or being protectionistic in order to win an election. In fact, Indonesia's got an election next year, and they have to be pro-economy in domestic issues.
They're not distracted by the international.
You're not going to say, I'm going to fight
politic.
with China and vote for me. They're going to say, I'm going to make sure that we have more electric vehicles so that we get off the fuel subsidy, right? And Thailand just went through a rather complicated but ultimately a pro-business government, and Singapore, I think it should be on track. So my thesis is that Southeast Asia has just only one playbook, which is to be a place where people prosper. So we're not rich enough, we're not developed enough to export a lot of these kind of issues.
I think next year is still going to be really tough. I think there's going to be a couple of major failures, but I think it's going to be a steadying ship, and I think there's going to be a few more, I think, opportunities come out. I think that there's going to be some
Specifics. What's going to fail?
I'm not going to go there.
Why not?
I'm not going to say specific companies. No, I've definitely got my views of a few companies which I do feel, and I do hear the rumors that are beginning to struggle, and they've been kept afloat by investors, but there's only so long that can actually happen. So I don't think we've come to the end of the road in terms of some. I think
no, definitely not. Right? Any business model that was built on hypergrowth because of a zero interest rate environment has the challenge to need to cut OPEX by 20% and drive towards profitability, raise the money at a lower valuation to then drive sustainable growth, right? Yeah. And so if you've got 10 companies who are built upon that zero interest rate business model, 5 will fail and 5 will succeed, right? And the 5 that succeed sort of limp along into a new way of thinking about things. The investors are going to get hurt in terms of the valuation. So yeah, the shakeout is still going to happen in 2024.
Yeah. So I don't see until 2025 that we're actually going to get some what I would call successful either exits or kind kind of up rounds. There might be the odd one, but fundamentally.
But one or two companies going to sneak out of IPO.
I just love how the both of you have agreed with me that it's really 2025 and not 2024 that things turn.
But I said I wasn't optimistic.
Yeah, okay. You just prophetically said 2025. So give us the logic. Like, I'm your LP. Like, what's the logic behind
2025?
What's the logic? And you can't copy us.
Well, a lot of what you said is in fairness, the logic for why 2025.
But in addition,
you know what? I'll put it at I'll give a simpler way to think about it, which is I think 2024 is a transition year. It's an upwards transition year, but it's a transition year. So I feel that there will be listings in Southeast Asia. There will be listings of Southeast Asian companies next year. There will be IPOs. And I think the real result of those IPOs will only be felt in 2025.
Yeah, that will open the market, right?
That will open the market for whatever's to come in 2025.
Okay.
So I'm optimistic about what happens next year, but I think that things will really start to change gears in 2025.
Yeah.
I do think that 2024 would also mark a year where perhaps, I don't know whether some of the VCs, fund houses, etc., will continue beyond that year, beyond the 10-year mark, or beyond the 2 to 3 fund mark that existed before that. So I think it's going to be one of those years where things separate out a little bit further.
Yeah.
Wheat from the chaff.
Yeah. And then I'll give you another prediction for 2024. I think there will be a lot more profitable tech companies, and people will start saying, oh, I'm profitable. And the reason for that is because investors are now demanding that these companies become profitable. Yeah. And I think a lot of people are realizing that, yes, you don't maybe need 2 marketing people. You could do it with 1 person. And I have so many companies where, you look at it and you say, if we just cut OPEX by 15%, you're profitable. Yeah. So you're going to see that in 2024.
Yeah. I think there's one big question mark in my mind about 2024, and it has to do with the still needed correction of multiples for a whole number of companies that are private and large in Southeast Asia. Many of these companies are still in the phase where they are trying to restructure or cost cut, but it is very hard for the valuations, for that to catch up with the valuations. What do you think the exit multiple is eventually?
I'll tell you when that valuation catch up. When they actually, when the company actually needs capital, they will have to come to market. Correct. And then they will have to accept the price.
So that is what and that is why I think 2024 is a transition year. Yeah. Because I think a lot of that, for companies that want to survive beyond that, I think that folks raised capital in 2021, 2022, perhaps the start of 2022, you're running out of that capital next year. You may have been able to make it stretch till the end of this year. next year's a year of reckoning. A bunch of them are going to come out to market. They'll get right priced. And I don't believe that that's a bad thing. I actually think that that's a good thing for the whole market, that the assets are properly priced. And then when they go for the listings or whatever it is, the exit events, which will probably happen for a bunch of these companies in 2025, at least they have a better chance of succeeding. And hopefully really succeed. That's my take. We've talked a lot about work and professional stuff, guys. I think we need to switch gears and talk about some personal reflections for 2023 as we end this year and conclude our final podcast. Hian, what's the year been personally for you, 2023?
It's been intense, right? That's a neutral word, right? It's neither good nor bad, but it was very intense. And the reason why it was intense is because obviously business was challenging and you had to keep your eye on the ball all the time.
On track, please.
Yeah.
Personal stuff.
I know. You want to talk to Jeannie about it? Because that's exactly what Jeannie said, right? And you know, in addition to that, right, Kellyanne, my 12-year-old did the big 12-year-old PSLE exam.
Yes.
So just to give you a sense of how intense it was, when she finally took her exam and we collected all the past year papers that she did, turned out that she did 138 papers in the past 12 months. English, Chinese, mathematics.
That's crazy.
138. There's this great photograph of her sitting on it. And then there's a great video of her taking it and throwing it away in the recycle bin.
Are you guys Asian tiger parents? Is that what this says?
What do you think, right?
Okay, probably.
No, but I think it wasn't a deliberate attempt to be an Asia tiger parent. We just started prepping for this exam. And admittedly, it's her first. I mean, she's our first to go through it. And so we just were doing things on the weekend, and we were just doing a couple of papers on the weekend for a year, and it turned out to be almost 140 papers. And so what I'm trying to sort of reflect is that the weekends have always been filled with a lot of just, you know, studying and very little fun. And up to the point of, say, you know, September, I forgot that as a family, we actually know how to have fun. So immediately after we did the PSLE, we left for Perth. You want to say something?
No, nothing. I'm just listening to your story.
We left for Perth, and then we spent a week there, and we did nothing. As in, like, we didn't plan anything.
I love that.
The kids went to a beach, and we sat there for 2 hours, and we decompressed. And I said, thank God, I still realized that, you know, we as a family can actually have fun together. And then, of course, I went off to Tokyo, this time without the kids. So the reflection to me this year was that it was intense, and it was a triple witching hour of both personal and business issues. And I'm just very glad that we're through it. And I'm just very aware that there's a little bit more resilience in my life than I gave it credit for.
Yeah. And I like the new ritual that you've started, where you buy yourself a Rolex every time a kid finishes PSLE. It's great.
No, actually, I've had these 2 watches for a very long time.
Very cool.
Oh, so I'll tell you another thing I've been doing. I've been doing the ice bath thing. Have you been doing the ice bath thing?
Occasionally.
I got to invite you to the ice bath thing.
Did you get one for yourself?
No. We have to go to the special ice bath.
I gifted that thing to you for your birthday.
Did you?
This year.
Is the ice? Yeah, that's the ice bath.
Yes.
Oh, actually, that's
how
right.
you tried it out.
I got into the ice bath thing because of you.
Yes.
I can't believe I can't believe I actually
just
just
like fishing for that compliment.
I am like the originator of everything cool in this thing, and just forgotten.
I gotta say, I'm going to start again.
No, you don't have to. We've made the point. Please don't speak anymore.
No, I just want to be very, very clear. This guy made me into an ice bath convert.
I'm just wondering where my invite was. It's like,
yeah, we're going to get you in.
Who do you think gets you those fries for dinner?
It's like, come on.
Okay, it could all be about me, but Michael, what's your personal reflections? Yeah.
I think, especially when you have 4 kids, ex-wife, and everything else, it's always a bit crazy. And sometimes I must admit, I probably use my work to actually hide from the personal craziness that I've got. So it's been a really, really tough year. You know, a couple of my kids have moved back to the UK, so I don't get to see them as much as I would like. And I must admit, it took the joy out of everything that I was doing. Going through that period of uncertainty, trying to figure out, you know, how I would stay involved with my kids' lives. You know, you can take family, I think, a lot for granted. And I always said, well, if I've got the weekends with them, I'll just give them that little bit of quality time. And then all of a sudden they're kind of moved to the other side of the world, and your access to them changes. So it's really kind of hit me much harder, and just means that I've got to probably prioritize more, and don't take things for so much for granted. Especially kids just grow up so quickly. I was just going through photographs, and I was looking at my daughter when she was like 3-4 years old, and all of a sudden she's like 12-year-old having massive arguments with me about parental controls over her mobile phone and some of the things that she was looking at, which
I
was
know that one. Yeah.
giving me the mad panic attacks. But I would say it's kind of ending on a really high note for me, because after being with my amazing partner for well over 5 years, having our daughter together, just last week, literally to the day, I didn't quite get down on bended knee, because those that can see, I guess we're on video now. If I get back down on one bended knee, I ain't going to get back up again. So I finally proposed to the young lady, and she stupidly said yes. So that's fantastic. And now I feel so much lighter now, because also this weekend we then went to get the engagement ring, which, oh my, Gordon Bennett. They really do know how to take advantage of you when you're buying those damn rings. I've got to say, and we had to get both the engagement and wedding ring as a package, apparently, according to my partner.
Really? So you got to go to my guy.
You know what makes it
I've been married 3 times. I'm very good at it. So you just
3 times.
Sorry, 3 times.
3 times.
Yeah. Once with my first wife, second time with my second wife, and then another time in the Catholic Church with my second wife. So you got 3 times.
Okay.
But every time you need to go buy diamonds. You see.
Yeah. So for me, just going through that process of, I'm actually like so happy with the world at the moment. So I feel very much energized. It was a long time coming, but sometimes I get in my own way. So I'm a pretty old school, but I don't.
Very small hands. I just realized that.
Very small hands. Yeah.
I'm still getting emotional for Michael.
So for me, Vishal, I was talking to him earlier about this. I need to point out I'm not that old school if I had a kid before marriage. But apart from that, I'm very, very old school. So literally for the last 3.5 years, I've been waiting to actually have a chance to meet my father-in-law in person. And between, COVID, wars and everything else. So the reason that I've had to wait so long to propose is because I actually needed to meet her father to actually ask the question, which was unto itself a very entertaining conversation, because he didn't actually speak English. So trying to have the conversation with him where I was expressing my love for his amazing daughter didn't quite go according to plan. But that's another story for another time. But Vishal, you've had a lot of time and enjoyment here.
Thoughts for 2023.
So, I was sharing this with you guys just before we recorded, which is I feel every year I say, wow, the years pass by so fast, right? Oh my God, I can't believe it's already November. And I was doing some reflection about this. I was going through my calendar. I was thinking, what were the personal reflections for this year? And once I saw what had happened through the course of 2023, I no longer feel like, wow, this year passed by really quickly, or, oh my God, where did all my time go? Because a lot happened in 2023 for me, and in general, I think things that I care about. And the way that I sort of like broke it down was like a little bit of a pyramid. So there's the top of the pyramid, which is like the most important stuff for me. It was my dad's 70th birthday this year. We went on a family vacation together. My brother and his wife flew down from the US. So the 5 of us went away for the weekend, and it was one of those wonderful times where you could just be isolated from the rest of the world and just spend family time together. And it was a wonderful thing. I think the both of you know how close I am to my nuclear family, and it's just something really important to me. It was my parents' 40th wedding anniversary this year. We went away for another vacation, and that was
impressive.
wonderful. Just hearing stories about how they made it. You guys will get there too.
Second time's the charm.
Maybe collectively with your first, second, and third and fourth wives, but still it's going to happen.
Second marriage is a triumph of hope over experience.
Yes. So one of you, we're going to get you a t-shirt with that. Don't worry. And so that was the second big thing that happened. The third, and it was sad, is that my maternal grandmom passed away, and that was, she's my last living grandparent.
Yeah, I remember that.
And that was that was a big deal. And I think I carried a lot of guilt for not seeing her for a very, very long time because of that. But I at least made it for the whole funeral and got to spend real time with my family. And again, just underscore the importance of making time for the things that counts. And the last thing, and this is happening next month, and I think all of you know this, is that I'm going to be an uncle. My brother and his wife, Adi and Lisa, are having a baby in December. Yeah.
Oh, that's fantastic.
And so super pumped about that. I might fly down over there for that. So, those are 4 big things to happen in the course of the year. And then that's at the top of the pyramid, like the most meaningful stuff. And I think being there for that and just being around is so important. Then there's stuff that's meaningful, but not up there like in that tip of the pyramid. So but still very, very meaningful, right? Like I had a big birthday celebration it was just basically an excuse to get all of the people I cared about in a room together to have a really great night out. It wasn't a significant birthday milestone or anything like that. Just a lot of fun with people that I loved. And I love the fact that I got to do that this year. When you stack these things up, the year just sort of
turns out there's
a lot else going on. And then we start the year with the SVB crisis, and then there are all these other write-downs in tech, FTX and crypto implodes. You put that in, there was a war that took place. Yeah. The year gets busier. And still add to that fact, still taking this place, 2 at the same time. And then you add to that fact that we've been just traveling. I was in 12 different countries this entire year. So then when you look back, well, even more stuff than that happened. We started, Seaman and Martin, 2 new partners joined our firm, and we had a number of other people join the company, and that changes the texture and dynamic and culture of the firm as well. So your experience is just different in the life that you're living.
So if you could sum up the entire year,
if I could sum up, I would just say, in one, I can't sum it up in one word, but
in a few words.
But I think what I would say is this, that 2023 for me was a full year.
Okay.
It was a full and complete year for me, and I have no regrets about how I spent my time. I have no regrets about where I was or what happened, or I don't feel like it just slipped by me, because when I actually think about it, well, what more could I ask for through a year? What else could have happened in the year?
When you didn't feel like that?
I
suspect everyone years.
I have a feeling that everyone feels that way because you don't do the reflection.
That's what I was going to say.
Once you do the reflection, you realize that,
you realize that you've done a lot, and it's been a long year.
Yeah, I think, it goes back to that old adage where you overestimate what you can do in a day and underestimate what happens in a year. And I think that's really it, right? Like in so many different ways. Anyway, that's my personal reflection, man.
I'm going to try and wrap this up by addressing the people, all 625 who probably watched this. And
it's a very specific number. Is that a prediction?
Yeah, that's a prediction. Well, it occurred to me that this is the first time we're doing it via video. And perhaps a lot of people who've been following us and listening to us, this is the first time they actually get to see almost like a behind the scenes way of how we do this. And I don't know. I just feel like I need to do a shout out that if you are watching this right now and you've listened to a couple of podcasts before this, or if you just figured it out and this is the first time you see this video, thank you very much actually for experiencing this. I think we want to put it out there. Coming back to the mission of the Unreasonable Podcast, which is no mission at all, which is just to have 3 people bantering about venture capital. Actually, that's incorrect, because the mission is always to lift the veil on the investor side and try to demystify and show that, at the end of the day, it's still a very human business. Being an ex-entrepreneur, I know that it's always tough. Michael's got a big heart, and you've been doing this for a long time. And so that's the wrap up for 2023. Final thoughts to the viewers?
Look, also, you can debate, disagree. But in this day and age, you can do it. And these are 2 of my best mates. And we'll talk, we'll argue, we'll do that. But we always respect each other's opinion. I think we just need more of that.
You can do that in a collegiate fashion, as the Right Honorable Ko Bun Hui said.
Yeah.
Absolutely.
Anything for the viewers?
No, I think you said it best. This is opening up the living room to everyone else.
Okay, then we'll just go back to audio after that. All right. Bye-bye. See you guys. Look to the camera. Wave. Bye-bye.